Recently, Nick Colas featured on Brighter with Herbert's channel, indicating that it might be wise for Tesla to make a capital raise. You've had lots of debates on Tesla's capital strategy. What do you think your opinion is on whether or not Tesla should make a capital raise like that?
That's a great question, David. And that was actually a great interview. I really appreciated that Herbert got Nick Colas on. Nick Colas is Wall Street, but without the daily noise. So I really appreciate that we have one of those legends now accessible, and I hope we're going to interact with him much more. He has a great Twitter feed called DataTracks MB, which I really highly recommend to everybody to follow. So his reasoning was that he comes from the car industry, and that's probably the biggest challenge I have with Nicholas. Everything he does reasons 30, 35 years of car industry expert. And it is true, Tesla is still very car industry dependent. He understands the vision of Elon. He actually commends him on that. But whatever he does, he never puts into the picture the bots and the energy sector. So we have to take that with a little bit of a grain of salt. Now, on the capital raise, his reasoning is he's gone through so many cycles of car makers and understands that we're currently in a very brutal environment, and that Tesla would be better off with 50 billions in the coffers than only 26 billion. Now, only 26, let's all count to 26 billion. That's a lot of money. But it is also true that if you want to expand in tough times, if you expect tough times in the next 12, 24 months, which could well be US elections, wars all over the planet. So if that materializes, you have on the one side 130,000 employees and want to keep those factories running, but at the same time, you have expansion plans, and Tesla has indicated that for this year, it probably will be more than the 7 to 9 billion capex that they're going to invest into new ventures, and that's going to continue over the next couple of years. So if you have all that, and at the same time, you need to reduce prices of the cars to stay, very competitive, you may need more of the money that you do. At the moment, we're not there yet. So let me explain the current situation of Q3 2023. So we moved from $23 billion in cash to $26 billion. But out of those $3 billion extra, only $1 billion was really free cash flow. $2 billion was a loan. They were actually using for the first time that $5 billion credit line that they had put in place at the beginning of the year. So what does that mean? They are currently trying to put the leases that Tesla has directly contracted with owners of cars that lease the cars into what's called an asset-backed security. So they will be off the Tesla balance sheet. And what it means is they currently set aside that credit line to mirror that currently bundled package that is not yet given to the capital markets. And so when that is ready, both the loan will disappear and the leases will disappear. So it will just disappear off the whole balance sheet. So those $2 billion don't bother me at all. But it also means that the last 4 quarters have been not so rich in additional free cash flow, and it could become less. So what is my opinion on a capital raise? I don't think Tesla needs it. I think we have the strength that we can go through this. But would it be nice to have? Well, it comes at a cost, because just having cash laying around at 4 or 5% remunerated, if you don't need it, comes at the price that at the same time, well, you should do something with your money. So depending how aggressively they build up Dojo, how many more NVIDIA chips they're buying, how much more goes into that research and development, and depending on how much they would need to cut further prices to keep the affordability and just continue being as brutal with competitors as they currently are. So those are the two variables that will and can alter my opinion that the capital raise is not necessary yet. Could very well be that in a quarter or two, I may come back to that and say, well, maybe they should do a capital raise. At the moment, I don't see it.
Do you think it's potentially better for Tesla to make a increased revolving credit deal? Then they'll have access to capital, which they should actually never need, and then you won't need to dilute at the same time.
Well, that's what they did at the beginning of the year. Very wise. They had a credit line the same terms, I think, with Deutsche Bank. I have to research that, but I do believe it was Deutsche Bank and then moved it to Citi. I think the $5 billion is a big measure, but if they want to increase it, given their nearly inexistent debt structure. They can easily increase it with the current bank partner lending or with anybody else. So I'm less worried about that, but it comes at a price because usually those are at a variable rate. When you have still an inverted yield curve, you pay quite a lot of interest on it. So you only want to use that either as bridge loans, what's currently happening for that ABS, just to get this all sorted out and then issue that debt, or if you want to do it, in a material way, because that proves to be cheaper than something else. And at the moment, I just don't see how that would be the case. So I think 5 billion is still a good number. It could become 10, but I do believe at that moment, they probably rather go to capital raise.
Gary Black has been very vocal in his
Oh,
opinion
yeah.
that Tesla should buy back shares. Why is this too early? And under what circumstances do you think Tesla should start buying back shares?
Okay. So actually, a year and 2 quarters ago, I was actually on that bandwagon as well. I thought then the price was around $220. It was a good moment to do it. I couldn't see the price fall much more, and I didn't have that recession fears that came through, right? So at that moment, free cash flow building up was enormous. We had huge contributions every quarter to free cash flow because car prices were still much higher. There were no demand issues. We still are building cars with an enormous increase in rates, but at that moment, it was just the sky was the limit. So at that moment, and that's what's still the argument of those that go for a buyback is, well, we're accumulating all this cash. It is giving us 4 or 5%. There's much better usage for it. Sure enough, if you need it for Capex, or sure enough, if you need it for other things, do that first. But there's still so much left. And rather than just lying it on a bank account or in a money market fund, do something with it. Now, the thing is, the economy has turned. The additional free cash flow every quarter is actually much more measured. And it is actually clear that the investments into Dojo cost enormous money. That is the way Tesla has chosen to go. I'm completely in agreement with that. But if you are in this market competing for these chips, you don't want to have given back shares, which actually will be a tiny fraction. You have to know that Tesla actually issues every year shares. So doing a share buyback is not going to decrease the number of outstanding shares by a lot. Fair enough, it may be a nice cute announcement, because what typically happens with those share buybacks is you announce that you now have a program in place. That doesn't mean you do it tomorrow. You now have a couple of weeks, months, maybe even quarters over which you will slowly start doing that. So that initial signal shows the company has confidence in its share price, thinks that they can buy it now cheaper than it will be later, and are ready to act. Nice to have, but minor compared to the fear that maybe we're running out of cash. Now, do I think Tesla will run out of cash? No, I don't. But I think the uncertainty factor on one side and the very aggressive buildup of Dojo and the chip purchases just don't make this currently an option. And I also think that Tesla is actually expanding into business segments that we don't realize yet. I think they're touching a couple of things that are just not on the horizon of these people yet, and therefore will need more capital expenditure for those.
So Tesla's Q3 earnings were seen as a bit disappointing by some. How has that impacted Tesla's capital allocation strategy moving forward?
I actually wasn't disappointed. I think what became very clear is that they are very prudent, making sure they are putting money into the buildup of Mexico only when all conditions are right. We have since learned that the permits have been obtained. So it's not as everything is slowing down. It's just being prudent. It could very well be that Elon is too traumatized, he actually said it himself, from the 2008 recession, and sees now more danger than there are really. But I'd rather have in these periods of time somebody a little bit more prudent. Now, why is that important? On the one side, I think the OEMs are actually, which were so far the competitors, are actually just losing grounds, right? They are feeling Tesla's pressure left, right, and center, and are having struggles themselves building up competitive cars and being themselves competitive other than on the ICE side, and just hope that the ICE side survives another cycle. On the other side, you have hardly any competition yet from Japan, but building up a lot. You have good competition from Korea that you have to keep an eye on, and you have extremely hard building up competition from China. All on those that I just enumerated, all those fights will be fought on affordability, on the price of the car. So if you have to drive the car price down, because that is currently the main margin maker of your business, you will have to ensure that you have enough cash and enough reserves and enough time, because that's what time is all about. Time is the ultimate currency, to build this up and to win this war, to win sustainable energy, but you also to win the market share that you deserve.
The final variable here is Capex strategy. Do you think Tesla is aggressive enough, or do you think they could be more aggressive, or maybe overarching a bit?
I think they're prudent at the moment. I'm actually less concerned about the economy than they are, but they are seeing much more than I will ever see. So I may be completely wrong. I think they're, in my view, a little bit too prudent, which is crazy because Tesla was never known for being prudent, right? That is a first. But it's also one of those times where you assemble better, make sure you know where you're going, delay projects that are more of pet projects, the Roadster, whatever, and make sure that on your main business lines, you get the margins out, which means working hard on COGS, and you conquer the markets in the best possible way. So, they've always been prudent, and I think that's also, more an attitude issue on advertising. And there are a couple of things where they're slowly turning. And I'm sure we're going to see advertising soon. But what they've also learned in so many ramps, right? The M3 ramp, the Model Y ramp, and now the Cybertruck ramp is you need time. You need to be sure you can give the consumer the ultimate product, and then you will win. Why today Model Y is the best-selling car, no matter what engine in the world? Well, because it was the best thought-through product. It allowed to digress typical classifications. It is the ideal family car. It is the ideal workhorse car. It is a beautiful car. It has so many things at a now extremely competitive price in the 40,000s. That's how you win those market segments. And that's how the Model Y won the market segments. So do I think they're overprudent in their CapEx allocation going to China? Well, I think they are right to actually expand now Austin, Shanghai, and Berlin to their limits, because that is a much easier follow-up. I mean, not that anything comes easy with permits and buildings, but it's a much easier build-up than going into markets where completely new, where suppliers have to follow, where you have the whole supply chain to get in place. So I'm sure, this was the right decision. I'm sure they didn't take it lightly and then decided that the new generation is going to start in Austin. That's where they have the brain power. That's where they have the lines built up. Once that is working as it will, the exact copy will be moved to Mexico and will be immediately rampable.